Greetings, it's Dr. Jeffrey Scott, and welcome to this week's rendition of my weekend market update. My email address is hgsidoc@gmail.com. If you're new to this channel, please click the subscribe button, hit the alarm as well, and then you'll get notified when I put these up on YouTube. I get them up every weekend. I've been doing it for over 20 years, but time varies based upon the rest of my life. Long title because I think it's a real question. Are we in a climax run which is going to end badly, as many people believe, or are we in this powerful new bull that's just getting started? Let's take a look at the evidence and see what we can come up with. Again, thank you for being here, and if you like this, please hit the up thumb. If you don't, the down thumb, and any remarks are appreciated as long as they're constructive, whether they're positive or negative. Disclaimer, this is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. The tools that I demonstrate are those that I use in my daily trading. I've paid for all these tools, and trading involves risk, and you're solely responsible for any investment decisions you make. I Most of my positions I own are options, especially in the market that we've been in. In a easy market, I probably have stock positions, but I'm very short term these days, so um, having options fits that quite well. Options are risky. They're much more difficult to trade. You have to worry about direction, timing, strike price, and then what combination of calls and puts, long and short. And therefore, if before you trade options, please make sure you have a decent options education. And I always refer folks to the Options Industry Council to learn more. Speaking of learning more, I think it's about 2 weeks out now. The Wealth 365 event is coming up. Here is a link. I will put it in the remarks section of the um, YouTube video. Love to have you join us. I think I'm going to be speaking on Thursday late afternoon and Friday as the market closes. It's really a great event where there's just so many great speakers, opportunities to buy things at better prices than you can any other time. And for those who have asked me, why is it I use so much wealth charts? Well, it's not the only program I use, but frankly, when I teach, it's the best program I've got because it's so filled of great things and it's easy to use. And that's why I use it. I still do things with other platforms from time to time. And at my recent live meeting, I did. But boy, Wealth Charts is really the most packed and I think powerful program on the market today. If you like these videos, I refer you to my stocksanddocs.com website. I put something up every day before the market, Monday through Friday. They're usually 5 to 10 minutes, and I usually give my thoughts on the market and maybe one or two stocks I'm going to look at. When I look back, I believe Monday was a holiday, market holiday. So I'm getting a 5-day look back, which actually I think hurt the returns, if I remember correctly. Um, in fact, if we look at the IWM over just these 4 days, it was actually up 3.7, 3.8%. So I guess it's capturing that. But if you see the spiders, the NASDAQ, the Dow, the NYSE, the Russell, they're all up at the top of this. And this thing, they just had great weeks. And if you look at 5-day moves in the Russell, 3.7, 2.6 in the NYSE, 2.3 in the spiders, 2.2 in the NASDAQ, 1.9 in the Qs, and 2% in the Dow. That is not a normal 1 week performance. Now, what's also not normal is look at the market we're in. And, the talking heads will talk you into thinking we're still in a bear market. But if you look on the right, spiders up 27.3% since October 13th. The Nasdaq's up 36.6. The Qs are up 45.3. The diamonds entered a new bull, up 20%, and the NYSE is just on its heels at plus 19.6. And the laggard Russell's at 15.2. So if you want to believe that we're in the midst of a new bull market, I think there's a lot of evidence to support it. I also believe that the spider is now within 5% of its all-time highs. So we've really had a massive move off the bottom. How excited is that? Um, and I hope you've been participating. Down there on the sectors, you could see, and I love looking over here on the right, that the laggard is utilities, and maybe that's not a bad thing because that's a defensive thing. And the leader is shocker technology up 53%, communications up 45, and then plus 34 on discretionary. Again, if this was a bear market rally, I'm not sure I'd expect to see numbers this impressive. How did we end the week? Well, what a powerful day Friday was. You can see on Friday, 91% of the sectors were up, 84% of the industry groups, 67% of the stocks. If you look at in green, would have been Thursday and Friday combined. Red was Friday. The only thing that was down on Friday was financials, interestingly. And now, if you go out and look at a month out, whether I look at 1 month, 2 weeks, 1 week, 2 days, or 1 day, you see mostly green. So this market has definitely turned into a positive bullish market. Now we'll come back to the buckets later, but we see 70% of the stocks in the real time, the S&P 1500, are trading above their midline. So that's bullish, but not excessive. And 17.6% of the stocks ended the day on Friday above their Bollinger Bands. That's a big number, but it can get much higher before the markets have to reverse. But that's telling me there's some short-term overbought in the market. Now, I just wanted to point out this is from the Q market breadth within Metastock. I learned a lot from this. I learned that growth is still exceeding value, although everything was up this week. And the fact this is pointing down tells me large caps are still doing better than small caps. I can see here stocks above the 50 in yellow, above the 200 in white, and the 50 above the 200 in orange. Um, we're definitely can see breadth is increasing here, and we had two signs of accumulation on this is a amalgamation of a number of markets as you can see listed here. So this tells me super strong market. These blue things here are bangos, and this preceded the recent pullback, which we talked about. In fact, most of the pullbacks occurred following bangos, but I have to admit this was not that impressive of a pullback if that was all that we're going to get. Now, rates are rising. Um, we're up this week 2% on the 10-year, 0.89 on the 30-year, and I suspect part of it's because of a resilient economy, and the numbers showing that a soft landing is very possible. Is there a recession or not? I think I'm feeling like the little person crying wolf because when you look at the top two pictures, this is going back to the 70s and 80s. 10-2 inversions almost always follow by these gray bars, which is a recession. 10-3 inversions, the same thing. So those would argue yes. Here, credit tightness usually occurs with each recession. We don't have credit tightness now. We may be a little bit more than we had 8 months ago, but certainly nothing compared to what we've seen in the past. And then, so that would go against a recession, at least anytime soon. And then here, the Philadelphia General Activity Diffusion Index, whenever it drops below minus 20, it's been followed by a gray band. So that would tell you, or it's in a gray band, that we have a recession coming. Yet we've resolved above minus 20, so that puts that in question as well. So I put the question mark there. Breadth improved, no surprise. Stocks above the 200, stocks above the 40, they are better. This is my really fast T2121, a 12-week, 13-week new high, new low. And when it gets up to the white line, the market always either goes sideways to digest or pulls back. So after the run we had, would it surprise anybody to see the market take a breather? And the market we've been in, more than just take a breather, what it seems to really do, again, more than take a breather, it seems to be rotation, rotation, rotation. So we'll see what happens there. Here's those buckets again, and you can see stocks accumulating either above the Bollinger Band or at the Bollinger Band. Now this is interesting. Here on the left is the NASDAQ, here is the NYSE. You expect Hindenburg omens at market tops. Are we at a market top here? Well, we're getting close on the spiders, but we're not. On the NASDAQ, we had a Hindi fire on the 21st of June and the 28th of June. If you see Hindenburg omens fire, that should tell you that the market is at a point, a dangerous point, and on a confirmed Hindenburg omen, 1 out of 4 times, the markets will take a pretty big fall. So I'm going to stick that in the back of my head as a risk here. But then I'm going to tell you the Hindenburg omen was really described for the NYSE, not the NASDAQ. And the interesting thing on the NASDAQ is look at all the new lows here in this column on the right and new highs. We look at the NYSE, they had some Hindenburgs in May, but notice now they have no new lows. And look, it's 11% new highs. Wow, what an impressive day Friday was. So getting extended, yes. Risk of a pullback, absolutely, by many means. And right now, those Hindenburgs are interesting, but I don't see them on the NYSE. So I'll keep my mind attuned to that, but we're going to wait and see. Here's looking at the fundamentals from last Friday, which would have been the 30th. And then I ran the performance of the stocks this week, looking at how they performed based upon the fundamentals on the 30th. So you could see almost everything is above zero. Some of these spikes are big returns. ERG is a way of rating stocks for EPS rank plus relative strength rank plus group rank. There's no correlation here between ERG and performance. Now, earnings were good, and no relative strength was better. Go figure that out. Kind of continuing to see rotation of laggards. And then as we look at news and earnings for this coming week, plenty of news this week. Short week in that Tuesday's off, and you have a half day on Monday. But you've got PMIs, manufacturing, you got employment, FOMC minutes. We'll see how much talk there was about two more, which I think the market already expects. Jobless claims, trade deficits, jolts, services PMI, and then on Friday, the monthly unemployment report. Not much in the way of earnings. Obviously, if you have one of those stocks, it still matters. So, broad-based winning week, everything was up. It's as if the market participants all of a sudden flipped that those rate increases are fine because, hey, the Fed's engineering a soft landing. We'll wait and see on that. Despite higher yields, rate-sensitive sectors, real estate, and utilities were actually leaders this week. That might be some of that rotation and weakness coming off the bottom. We could have seen window dressing as Friday was the last day of the second quarter, and then that PCE may or may not have been better than expected. As I mentioned, we're in bull market territory at everything but the Russell, and the Russell is close. Now, markets don't go up or down in straight lines, so we won't expect a pause or pullback soon, especially with some of that breadth that I showed you. Odds of recession still hang overhead, but it seems the market is expecting a mild one at worst and discounting another big leg down. Reminds me to trade the markets we have, not the ones that I or any other thinks we should have. I'm still long. I still have some cash. I've got stops. But, the market's different. Take a look at FFTY, ARKK. Breakouts are working. So part of me wants to believe that we are actually in the early stages of a new bull. Now, the Microsofts, the Apples, the Nvidias, they've already ran. But maybe when we see the 50 FFTY turning up, maybe we're about to see the rest of the market join. That said, when markets go up this fast, pullbacks are expected, and that's why I said this still could be a climax run. So there you go. How's that for telling you nothing? And then here's again the Wealth 365 event. So on to the charts. So in wealth charts, one of the places I like to go look first is the hot stocks section. And the hot stocks, and I'm looking at ETFs to give me a sense of what's hot in the market. So we noticed last week, not the week that just ended, but the prior week, that there were very few things at the 800 level or higher as the market basically on the prior week just hobbled into the finish. Well, notice that real estate has a flame and it's above 800. Communications, a flame, still at 800. Software, NASDAQ composite, technology, Qs, internet, growth, discretionary, cloud computing, TQQQ, and then we drop down significantly, so I won't even count those. So this is very much still tech, software, communications, although the real estate is something that's interesting. If we go into the indices, and let's start with a 5 minutes and take a look at um, what we saw on Friday. And, this was the gap up in the morning. We saw this across the board. And not only did we hold up, we closed just off the highs and well above the opening bar. So big move up on the session. Um, and so what we'll see are strong candles across the board. So if we look at the dailies, let me make sure I got the dailies everywhere. Perfect. You can see gap up, close right off the high. Now, I have no problem, and I like how they actually changed the trend line tool a little bit. I think made the tool better. Let's see if I can move this out of the way. We broke right through that trend line. And to me, what a bullish move. Great volume. I think the NASDAQ or the spiders look bullish. I could do kind of the same thing here on the Qs which have just been performing magnificently of late. Just connect the highs there, the highs there. So you had two flags broken out. I guess you could probably say you had three. Um, Although I think the breakout day was probably back here on Thursday. This is the diamonds. Looks great. The Russell looks great, except we have to see if we can get through the anchored VWAP going back to the 2022 highs. That would be really impressive if it broke above it. If we look at the VIX, interestingly, on Friday it was up 0.37 despite a massively strong market. Um, and you could see it did close near the high after trading down at some parts during the session. That's kind of interesting. If we look at the weekly VIX, you could see another um, small gain on the week, up 1.12%, which is interesting, but a candle that just is not a very strong looking candle. If we look at the dollar is sort of going in a range here between the 50 and the 200, was actually down on Friday. Going into commodities, we can see that with a weaker dollar, we've had a rebound in gold. Silver looks like it's put in a bottom short term on the 200. Oil bounced up into the 50. We'll see if it can do anything. Remember, this is a market that had not one but two different production cuts announced by OPEC and the Saudis, and it has not kept oil up at all, which is interesting. And natural gas, the it's dead to me market, keeps teasing, was up 3.34% on on Friday. And if we look at the week on natural gas, you could see on the week it was down 1.72. And of course, I've lost my 10-year for some reason. Oh, let me just try this one more time because it was here before. But the 10-year, as we showed you before, was up a little bit on the week. Well, I'm not going to worry too much about it. Timing model, you'd expect it to be back to all bulls based upon what we saw in the market this week in UR price on the weeklies. Look at their closing near the high. Spiders, Q, Russell, and diamonds. I have to close on the weekly above the 30 period WMA. and I have to have the bongo be green. So all four are in bullish mode, and therefore I'm still long this market. If I jump and take a look at breadth, it certainly would be nice to see it. So first of all, I like looking at is TLT, how's it handling versus spiders. As long as this is going down, then the recession isn't here because we'll expect to see bonds spike in the setting of an economic slowdown. RSP versus spiders. Now, if I want to be pro big caps, I could say we're still pointing down to the lower right hand corner, which favors the spiders. But one could also say maybe we got a higher low here, and we'll see if we can't set a higher high. But at nothing else, we seem to be stabilizing on the broad-based versus the cap-weighted spiders. And if I look at the same thing on the Qs, you could say the same thing that suggests that perhaps we're starting to broaden out. This is semiconductors, a very short-term chart, just looking at the broader XSD versus the larger cap SMH, and clearly the broader is showing a benefit. 50 versus FANGs, boy, do we need this market to turn up. Again, we're bouncing around the bottom. I could be bullish or just say the truth, which is too early to say. And then the Russell versus the Qs, as long as we're pointing up here, the Qs are dominating. If we look at the sectors in the market, everything was up on the week. So materials improving, communications still strong but off their highs, energy still weak, financials still weak, industrials right off the top, not the top, but doing okay. Technology strong. Now staples, no, although real estate looked good, and utilities, not so hot. So the defensive plays are not leading. That's good to know. Discretionary continues to look great, and healthcare really doing poorly. Fangs versus the spider, not doing much of late, going sideways, but you could see how the Fangs, large cap, mega cap tech, have outperformed the S&P 500. So it's the same old technology, communications, discretionary. If I go into the scanners, let's start with a heat map and look at the S&P 500. Oh, are you going to let me do that? Or you're not going to let me do that? Huh. Okay, so let me just quickly reset that. I have a lot of programs running, to put it mildly. I have them running in the background just in case I decide I want to go and visit them. All right, here's your heat map. You can see a powerful long day with big cap tech all looking great. Nvidia up 3.54%, leading it. Carnival Cruise up 9.32%. The cruise ships look great. We talked about last weekend that on Monday these guys would have earnings, and it'd be interesting to see what they had to say. All right. If we look at sector scanner, financial services, healthcare had good days on Friday. But if we look at the daily algo score, what's really leading real estate, industrials, interestingly, energy has come up. There's your technology, which has been strong for a while. On the weekly, it's industrials, technology. Surprising that communications is further down. But Meta is a major component of the cap-weighted indexes, and that's driving things. Um, I like looking at Well Scanner to tell me what's working. So I've got the flames turned off, so I'm going to see the top performing ETFs coming up, and I could see real estate, retail, real estate, communications, software, home builders, home construction. Here's ARKK. Um, and this one, depending how you look at it, this one's had a nice run up here from 34 up to 44 in just about a month and a half, 2 months. Pretty impressive. So same old, but real estate and retail, that's interesting. Now, there are many ways to find the stocks that are leading. I can go and I could scan and look for high relative strength stocks, the Market Smith, CanSlim, William O'Neill stocks, and I do that. I could look at 1,000 charts. I do that. But what I really like is the ability to find a pattern over and over again. So I've been trading for probably close to 30 years. I've had some great years. I've had some not so great years, but I'm still here. And what I've seen is a similar pattern work over and over again. And when I go to my CAT scanner, I have the ability to actually scan for that pattern. So give me a second just to set this up here. I just want to adjust the size of these columns a little bit. So what I noticed is stocks have a tendency to do the same thing over and over again. And I want to find stocks that have been in an uptrend, that have pulled back to support, and then I want to buy them as they come out of that support basing pullback. And so I want to look for longer term uptrend, shorter term pullbacks, momentum coming after that pullback, and I want to buy them before they get too extended. So it turns out that that's how I built the scanner. So CAT scanner, pullbacks and uptrends is my favorite scan, and it basically looks at price and volume. I do a lot of options, so sometimes I want to just um, have options available. So let's just make it greater than or equal to 1. So I'm not requiring liquidity, I'm requiring that they have options. At least one bullish dot, no bearish dots. And I'm looking for that reversal on the short-term bongo within 2 weeks, and then both the bongo daily and weekly are bullish. So I apply those changes, I rank the stocks here, and I bring these up to the top. So what I'm specifically searching here, and I don't, let's look at Sinbei. This one's not clean by any means. It had a big gap up, so it's not the perfect pattern, but weekly is up mostly because of this week. This red here on the daily bongo shows the pullback that we saw. And then we had massive volume on Friday, 3 dots, volume, breakout, and momentum. Relative strength and OBV look great. So this is a biotech that had good news on a liver drug. And if you think about Madrigal is another one, I think Voyager might be another one. Um, on positive news, these stocks will break out like this, and sometimes they can run quite a bit. Now, sloppy pattern. It's all news driven. It wouldn't surprise me to see some consolidation here. But I remember MDGL, Madrigal, as an example. And look what happened here when it had surprising news. It went up like $100 a share, traded up, and I've set up here short, 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 short because I've seen this before. It's come down some, but it still held most of its gain. In fact, it's still holding up above the opening gap. So CBay is early in this move. Now, do I think this goes up to 100? No. I think, like I said, it wouldn't surprise me for it to stall out here. But news can continue to drive something higher, especially when that news came out on a holiday shortened week. Here's somebody with a buy rating of 12 before the market took it up. Smart Global Holdings, don't know anything about what this company does. And, I look at this and I see a woulda, shoulda stock. I see down here that this line here is at 100. That tells me it's extended. It's clearly extended. Now it made the scan because it had that little pullback in the 17 and it had dots. It had volume, breakout, and momentum. Um, it would have had a gap up too if it closed in the upper half of that line. So this was a big move. I would at least do research. Now, when do I want to buy this stock? Much easier to buy it here. Taking it when it moved above these moving averages, I had breakout and momentum. I had relative strength and OBV working. That would be a much lower risk buy. And frankly, even in this area here, where you still see the accumulation of dots. So I think this one's a little extended. Doesn't mean it doesn't go higher. Dover, When I first saw this, I used the term that my mentor Ian would use, which is it's kind of loose. It's all over the place. This doesn't look anything different than other times, so I probably passed it. Rockwell Medical, very cheap stock. But what a beautiful pattern. Nice stepways up. Look at the massive volume that's come into the stock over the last month. Three green dots on Friday. Volume, breakout, momentum from a squeeze, relative strength and OBV. I don't know anything about what they do, but I love the pattern. And notice that all of these have this little pullback. And this is a daily, weekly, and monthly bongo. You can see it turning red there. SAP. This is one, I believe, a software company breaking out after a nice little sideways move. I like to see it clear up a little higher, but frankly, it's pretty close to, well, it's above that was the last closing high, and it closed at less than a buck from the prior closing high. So this one looks interesting. Again, good volume, breakout momentum. I'd like to see a little bit more on the relative strength side. SBS, don't know what that is. I'm going to skip it. Alcon, I think this is a biotech pharma that's involved with eyes. I wonder, it must be an ADR or something because it's so gappy. But broke out here, don't like how it finished. Array, this is another loose chart. This is a solar semiconductor play that looks like it might be getting ready to run. So if my intent here is to find a pattern, every one of these stocks, they may not be great to buy, but they all fit the pattern. How about Avidel? This one looks really interesting as well. You notice how many of these are healthcare. Pullback, coming out of a squeeze, breakout momentum, great relative strength at OBV. I put these on my list and I go and do a little bit of research. I mentioned Carnival Cruise Lines. You could see it pulled back on the earnings and then it took off here. Um, Raised it to 25. Well, 25 is another 40% from here. But look at the volume that's come in. Look at the relative strength at OBV. If you don't have a cruise line, maybe it's not too late. Cadence, this has been another big winner. I mean, you want to see big winner? I see $158 on January 9th when the relative strength broke out. I see 234 6 months later. Um, Not quite a double, not a bad move whatsoever. Nice pullback. Um, I'd wait to see some more. And I could go down the list. Here's another of the Carnivals. It's a different same. This CUK versus the CCL, and you can see this one breaking out as well. See if anything else jumps out at me. And then high yield. Um, I don't know. I have a hard time saying that that looks anything different than the left, so I will continue to watch it. Plus, don't like the relative strength. Insumed has been another good acting healthcare. I think this is on the technology side. Broke out over the moving averages. Breakout momentum, relative strength at OBV. That's another one that I think I put on my list. And probably the best stock that I saw this weekend, MDB, is a stock that had a big gap up here. Let's see if we can figure out why. Earnings beat, 194% beat. That's pretty impressive. And it looks like it's running again because it took out the high here. And that was a signal to get in. Our relative strength, OPV are great. It's not extended. Coming out of the squeeze again, I think that one looks very good. So the point here is all I did is design a scan, run it against my combo leaders whose code for wealth charts users I put into the body of the YouTube video remarks. That is the top, say, 8 to 900 stocks in the market, balanced technicals and fundamentals. Now, I have other scans that I could look at. Sometimes you're not going to find anything that's up, and you're looking for things that are turning around after being beaten up. So I might look for bottom poppers. Bottom poppers are stocks that have sold off. I don't require anything on the weekly bongo. In fact, you could see for the most part it's bearish, but I do require a bullish daily and some momentum. So progressive software. Um, Probably too loose for me to be chasing it unless I knew something about it, but lots of volume. Pulled back to the 200, broke out all the way above the 50. Skechers did interest me. Why? Because uptrend, sideways, a bigger pullback than I've liked. Perfect bounce would have been off that 50, but we took out the 50 and the 17th on good volume, relative strength, peeking its head up. That's one that I liked on this list. Um, Gold and silver have been beaten up. I've been looking at several of these to see if anything looks interesting, but I might be looking to find some gold stocks if gold decides to start going higher. I think the minute they cut rates or they stop raising rates, you're going to see gold have a big rally. So at this point, after the markets move so much, I'm not sure I'm going to find a lot on my bottom fishing. Sometimes I just want to buy what's broken out and going crazy, and I don't care about stops and stuff. Well, that doesn't happen often, but that's what you get here. This is a rocket. It's gone from 16 to 29, and it broke out on the 15th. Oh, by the way, notice what we saw on this date. We saw a breakout above the 200. We saw a breakout in momentum on dots. We saw relative strength start to take off, and we saw OBV turning up. What a beautiful stock. I can't buy this thing. It's way extended. Um, Rockwell we looked at, SAP we looked at. How about Berkshire Hathaway? Whoever thought of this as a market leader in a growth stock? Um, I'm not necessarily chasing it up here. I don't like the fact that the relative strength isn't doing much, but this list is going to find stocks that are like rockets. These are risky stocks because they've had a long run, but sometimes you buy high to go higher, but you have to recognize the risk. And then sometimes I just want a play for speed. And when I play for speed, all I'm asking here is that I get dots, and that's my momentum up. And when I look at something like Halo, this is a stock, another healthcare stock that's really been beaten up. Interestingly, its weekly bond goes green, its daily bond goes green. It's coming out of a squeeze with volume, breakout momentum. And even if it only runs up to the 44-yard line because of the 200-day moving average, that's still a 20% move. So these would be stocks, and all they have to do is have the dots. So that's going to be a wide variety. Now, I mentioned that I do scan for things like high relative strength. So I actually have a list that I update every week, which are stocks that have high relative strength and are leaders. Now, the problem with leaders is I'm probably not going to find a lot of pullbacks in leaders. So let's look at pullbacks and uptrends and see, whoops, we already know the values there. Make sure that's what I'm checked. That's checked. And let's see, here's Carnival Cruise Line. It's already gone. CUK we looked at. HSBC Holdings. Here's that MDB. That's nice. Noble Corporation. There's a lot of things going on in oil services. I didn't read Barron's yet, but I think Barron's had something talking about oil services. Now, ServiceNow is another one that looked good. So these would be stocks that made my scan because of a high relative strength. Now, it's interesting that several of them are popping up. Now, if I looked at rockets, I'll probably see even more of them because these are stocks that have already run quite a bit, and you could see high relative strength stocks, frankly, by definition, are rockets. Not giving me an entry here. Maybe there was an entry back here, but they run like rockets. Um, we heard retail was good. Let's just take a real quick look at retail. So, and let's go into pullbacks and uptrends. Canada Goose, it's below the 200. I probably would pass. Overstock is a story. They bought the name and some of the intellectual property from Bed Bath and Beyond. I'm not sure that changes everything. I remember when this was considered a Bitcoin play too. Walmart, It doesn't look bad, does it? Is this getting ready to run? You want to see what running looks like? Take a look at Costco. Big growth stock. So I've looked at multiple different ways of how I like to look at stocks. I've given you a lot of names. Now, why aren't I looking at bearish stocks? 'Cause I really don't think the market's going down. But let me just pull up. Well, let me say that differently. I'm not saying the market's not going down. The market certainly can go down. The market's overbought here, and a little pause, a little sideways motion is preferred, but we could get a pullback. Um, but I still think the market's going to end up going higher after that pullback. When I look at my weekend short review and I look at bearish retracements and downtrends, there aren't many. This is one that we talked about during the week of what happens when a secondary comes out and the market doesn't like it. And this is Axisome. But none of these were stocks that made my shorting list. BioMarin just had a big drug approval and they sold off. That's not a happy sight. This might be one to add to my shorting list. But let's look at my watch list. See if there's anything else that I wanted to call out to you that I thought were worth you knowing about. So this is a week of stocks, list of stocks that I'm interested in, not necessarily going to buy them, but stocks I want to watch. EGO was a gold stock that I thought looked interesting here. It's a cheap gold stock. It's pulled off. It's already starting to move. It had a breakout momentum. This is what I'm going to watch if gold tightens up some. Let me just see. We've talked about the Bitcoin stocks during the stocks and docs videos. This is MicroStrategy breaking out on volume here. PAAS is a a silver play. Again, is it really that exciting here? No, but I wanted to start building stocks that I could look at. Now, airlines are interesting, and Delta is probably by far the best of them, but it's this is a rocket, and it's at 100 on the high jump. I have a hard time chasing that. I don't think I want to fly JetBlue, mostly because I don't have first class and I'm 6'5" and a big boy. But this one has run a lot, although when you sit back and look at where it's come from, it's been much higher. So this is actually a bottom move, and this one looks like it's turning around. We'll just go down the list and see if anything else were things that I thought were ready for tomorrow. You're going to see a lot of the stocks we looked at. Look at CMG. Kind of looks a lot like that MDB where gap up, I believe, on earnings here too. Price, increase, sideways move. And now does it look like it's running again, breaking out from that consolidation? Hubs, HubSpot, another leader, a little bit of consolidation. Looks like it's getting ready to go. Another pretty chart, Lamb Weston. I think this is in the agricultural products, breakout momentum. Now, I don't like the fact it had a bunch of recent red dots, but it just pulled back, and now it looks like it's breaking out. Not ready yet, but one I like to watch. Microsoft, what can you say? It's pulled back a little bit, but what a leader. For that matter, you can say the same thing about Apple. NVIDIA got some upgrades on Friday, so gapped up, pull back. Is it ready to run? I'm going to watch that one as well. So as you can see, a lot of things here looked interesting. Weatherford is another oil services company that looked interesting here. It's had a big run up and going sideways. On the short side, to be honest, it was hard to find good looking shorts. And I'm certainly not shorting a market that's about to break out. But I'm going to have a list ready in case it doesn't. And Dick's Sporting Goods was one that just looked weak here. It's still above the 200. I look for it to break below that and then fail a retest before I get excited. Um, but this was not a list that I was really excited about. Again, even Micron, although it failed the 50, so I should expect it to come down and test the 200. There weren't a ton of great shorts. No surprise, it's a pretty strong week. So, hope you enjoyed my little walk through the markets. Um, I am bullish leaning. I am long this market. I still have cash. I really want this market to go higher, and I think it likely does. But as I said in the beginning, nothing goes straight up. We're getting overbought on the short term, so it wouldn't surprise me to see some more rotation. Excuse me, and maybe a pullback in the short term. Have an awesome week and enjoy the 4th of July and be safe.